Hello traders, Day Trader Matt here of businesswithtrading.com. Hopefully you're having an awesome week so far. We did see price roll over and it did take out this level down here. I'll put out a tweet. Price is following our analysis perfectly below 2730. Should see mid to lower 2600s, which is this box down here, yellow, beige, whatever you want to call it. I call it yellow, but perspectives in the eye of the beholder. So that's what we're basically looking for right now. Below 2730 was right here. It took it out. It closed around 2714. 2713.83 is what my screen's telling me right now. So it's going to be interesting. Price is going to be able to fall much, much lower. And I wanted to show you a day trade. Let's go to a 5-minute chart. And yeah, this might look a little convoluted. So this morning, this is 9:30 right here. So this is the open right here. Price chopped around all night long, opened right here, came up a little bit and started to come down, came back up. And this was the perfect short right here. I did take a short here, short-lived, pardon the pun. And as price did come up, this was the perfect short. Now, I didn't quite expect price to run down and break this 2730. I did say if it were to occur last night that I would expect price to come much lower. And that's what I am expecting right now. But it was interesting nonetheless. So shorting here, you were able to take very tight stop. You could have put your stop above here, or you could have just ridden this as a stop. And, said, well, if I get out, I can always get back in. And that's usually my theory. Day trading, you have to be very precise, and I'm okay with that. I'll take a tight stop. If I get stopped out, I'm okay. I can get back in if I need to, or I can just set it out. That's what day trading is all about, in my opinion. There's no way I would, let's say you're getting short down here at 27.55. You're going to front run this. I don't think price is going to hit this area, so I'm going to short it at 27.55. But I want to be conservative and have my stop over this area, which is above 62.5. That's 7.5 points. I'm not comfortable with that. That's way too much risk for me, and that's more risk than I would recommend anyone else take. Obviously, we all have different risk tolerances. And yeah, in hindsight, you're like, oh yeah, well, price ran, 40 points. What is it? 55 minus 40 would be 15. 30 would be 50. Yeah, minus 40. So yeah, you're like, price ran 40 points. Look at that. Why can't you take a 7.5 point stop? And that's hindsight trading. You have to be precise when you trade. You also have to be aware when you trade. So if you're shorting here, let's look. All right, well, price made this low overnight and made this low the day before. And today it's slightly lower, but it did buy up off of this. So are you expecting this to break or are you not? Again, my tweet, I said below 2730 and we should see price in the mid to lower 2600s. So we're looking below this, then we can see lower prices. So it hasn't broken yet. So we can't assume that it has already broken because it has not broken yet. Obviously this is going to be a few points off. Cash was what I was showing before. Now this is the futures market because I'm actually showing a trade setup. And, the different options that we can do once we enter a trade. So for me, I'm shorting up here. And my stop is right above this line here. So that gives me a 2-point stop. I'm comfortable with that. 2 points or less. That's my comfort zone. I'm not comfortable taking a 5-point or 7-point stop on a day trade. On a swing trade, I can give it a little more. But mind you, this 2730 has not broken yet, and price has been a little bit erratic. So I'm trying to be conservative, and I got into a nice day trade. It was very, very nice. Sold off very nicely, and there's a couple options you can do. Okay, so we got short here, and what I'm looking for is right in here would be my sweet spot. Of course, I'm going to target a little bit lower just to see what happens. And price actually did start to run lower. So the different options you can do, you can take partial down here and then roll your stop a little bit below break even. You can take all of it down here. And what I like to do is take a little bit off and roll my stop a little bit above break even or below break even in this case, depending on which way you hold the chart. So as price continues breaking down, your options are you can start running your stop closer to the highs. You can keep your stop there, or you can just move it down a few points above the highs and then a few points above this high, and then as it comes down maybe a few points above that. You can keep doing that. Now the thing you have here, and it's really cool, price has broken. It broke it badly in the cash. It definitely broke it in the futures market, obviously. We can keep our stop above this area and see if it continues even lower, or we could have just taken our trade off. For me, it was a day trade. I took it off. That's what a day trade is. Day trade does not turn into a swing trade for me. I'm very disciplined. A day trade is a day trade. A swing trade is a swing trade. And that's how it was for me. Took partial, rolled my stop, and then just got out at the end of the day. That's how it works for me. How it works for you, I'm just trying to highlight some different examples. Because it broke so bad, you can keep your stop up here and see if it continues lower, because I would predict it to price to come maybe somewhere 25-30-ish and then start to roll back over. That's what I would be looking for. I would kind of be shocked if it came back above this 37.5 level, even 37.35. I would be shocked to see price back up here. It could happen, but I would be shocked. So I'm thinking somewhere up here, and then price will continue rolling down the hill. So that's what I'm looking for. I wanted to show this just because I have gotten some questions about, day trading versus swing trading. I think you can make a lot more money in swing trading than day trading, just because your risk is a little bit different, and there's a way to manage that a lot differently. Day trading, you have to be more precise. Swing trading, you don't have to be as precise. Just like in this example, if you would have shorted 55 and been conservative, you would have had to take a 7.5 point stop. Even if you would have kept it here, it would have been a 4 point stop per contract. Whereas if you shorted here, which was your optimal entry, you would have taken a risk of not getting filled, but you would have been able to keep your 2 point stop. So that's the difference there. If I was swing trading, let's say I was looking for 27.50 to break. Broke here, price came down, broke it a little bit more, came up, came down, came up, came down, came up. You could have shorted here, looked for something, shorted here, looking for something, and taken a wider stop. But hopefully this helps a little bit with the whole stop theory and how much risk is appropriate. For me personally, that's my risk. I want to take, 2 points or less on a day trade. That's what I'm comfortable with. And I've been trading for, you know, almost a couple decades, and that's my style. That's the style that I teach. So if you wanted to know how much risk I'm comfortable with as far as like what I teach and recommend to others, that is what I actually recommend to others. Exactly what I do. Taking a 2-point stop, I'm very comfortable with. Let's say you have a little more risk tolerance, 3 points, yeah, that's not that bad. But if you start taking 5, 6, 7 points, that's where it can get definitely go haywire a little bit. So hopefully that made sense. You got something out of it. You're probably going to have some questions. Feel free to put them below. You can also email me directly if you would rather do that. A lot of people do, and that's cool. support@abusinesswithtrading.com. That's my email address. You can also go on the website, go on the contact form, businesswithtrading.com, under About, Contact Us. You can hit me up there as well. Thanks for watching. Have a great rest of your trading week. I'll see you in the markets. Thank you.